Hello everyone, welcome back to this week's Technical Insights. I hope everyone is still enjoying your New Year celebrations. On the markets, US stocks ended mostly lower, with major US indices losing ground after the White House said that President Donald Trump will implement on Saturday tariffs of 25% on Canada and Mexican imports and 10% on Chinese goods. In early trading on Friday, the blue chip Dow was up more than 170 points and reached a high of 45,054 points before losing 337 points or 0.75% to close the day lower at 44,544 points. This was more than a 500-point drop from its peaks last Friday. Broad index S&P 500 also came close to within 10 points of the all-time high that we saw last week at 6,128 points, before losing about 30 points to end the day 0.5% lower to close at 6,040 points. Tech-heavy Nasdaq also pulled back 54 points or 0.28% to close at 19,627 points, despite strong earnings from tech stocks like Apple, Microsoft, and Meta Facebook during the period of last week. Stocks with exposure to Canada and Mexican markets also reacted, with Corona Brewer, Constellation Brands, and Mexican food chain Chipotle shedding more than 2% and 1% respectively upon that news. For the trading week, the Dow is up 0.27%, but the S&P 500 declined 1.28%. The Nasdaq also fell 1.64%. Mega tech stocks also sold off on Monday after the Chinese startup DeepSeek unveiled a breakthrough in cheap AI models. Last Friday also marks the last day of a very volatile month for January for traders. Nonetheless, all three major US indices posted monthly gains, with the S&P 500 rising 2.7% for the month and the Nasdaq advancing 1.6%. The Dow was the outperformer during the period, jumping 4.7% for the January period. In the next few weeks, investors will need to brace for further details on the tariffs after Donald Trump has repeatedly warned about using this measure. Uncertainty over the impacts of tariff will cloud the outlook for the US economy and inflation going forward. Markets were also likely to go down lower if there were to be retaliation movements from the other countries as well. In Asia, stocks have a shorter trading week due to the Lunar New Year holidays. The Hang Seng Index ended 27 points or 0.14% higher on Tuesday, closing at 20,225 points in a half-day trading session. This marked the third consecutive winning sessions, mainly supported by advances in tech and consumer sectors. Traders were also closely watching the developments of AI model Chinese startup DeepSeek, as their emergence raised concern about US dominance in the tech sector. The Hang Seng Tech Index also rose last Tuesday by 36 points or 0.77% to finish at 4,723 points. Xiaomi shares hit a record high on Tuesday, surging over 3.2% to close at Hong Kong dollars 38.30. Baidu shares also jumped 3.6% to Hong Kong dollars 87.80. Meanwhile, Alibaba shares also rose 1.2% to Hong Kong dollars 88.30. For the short-term trading week, the Hang Seng Index added 0.79%, while the Hang Seng Tech Index rose 1.42%, marking their third consecutive winning weeks. Hong Kong market will be closed for the rest of the week and will reopen on Monday, 3rd of February. Back in Singapore, our STI index was looking very positive last Friday, tracking mostly the positive momentum that we saw in the US. The STI was up 54 points or 1.44% to close at 3,855 points. Big movers on the index last Friday include Genting Singapore, rising 2.5 cents or 3.42% to close at 75.5 cents. And Sembcorp Industry also advanced 15 cents or 2.76% to close at $5.58. Yangzijiang Shipbuilding also performed well, adding 8 cents or 2.69% to close at $3.05. Our three local banks were also up around 2% each. And for the short-term trading week, our STI is up 1.36%, overcoming the small 0.17% loss that we saw last week. And being the last day of the trading month for January, the STI is up about 1.73% for the month, so it's been a good start to the year so far. And this is STI's third consecutive winning month. And for this week's technical analysis, let's look at the top gainer on STI last Friday, which is Genting Singapore. Last Friday, Genting Singapore shares rose 2.5 cents or 3.42% to close at 75.5 cents. The previous time that we covered Genting was on the 25th of November video. During then, we saw Genting announce their third quarter results, which was negative due to the 63% drop in third quarter net profit. causing Genting share price to drop to a new low of around 76 cents. From the chart, we can see that Genting share price is still firmly entrenched in a downtrend formation, with the year-to-date low now seen on the 13th of January period at 72.5 cents, with the year-to-date high on the 8th of January at 78 cents. Last Friday, the 3.42% jump in Genting share price has pushed it above the white line, which is the 20-day moving average at 75 cents. The next resistance can be seen at the blue line, which is the 50-day moving average at 76 cents, with the final resistance at the 8th of January high at the 78 cents level, which is now finding confluence with the upper bound of the Bollinger Band. Support-wise, the year-to-date low at 72 cents will be the immediate support level for Genting share price. On the indicators, we can see that the MACD indicators just turned positive last Friday, indicating the crossover of the MACD line above the signal line, suggesting the start of an uptrend. The latest RSI at 51 point last Friday just crossed 1 point above the 50-point neutral mark. But with a reading close to 50, the uptrend momentum is still relatively weak according to the RSI indicator. So even though the MACD is indicating that this may be a start of an uptrend, the momentum may still be weak according to the RSI indicator. And should Genting share price rise further this week, investors should consider selling into strength at key resistance level like the year-to-date high at 78 cents, as the weak momentum may not be able to sustain or form a new higher high for Genting share price, which might go into a range-bound formation in a near term. On the longer term, 12 analysts covering Genting have an average 12-month target price of $1, with the maximum estimate at $1.22 and the minimum estimate at 80 cents. And these are the updates that I have for you this week. If you do find the information useful, do remember to like, share, and subscribe to stay updated with the latest market movement. And I'll see you again next week in the next Technical Insights.